All right, let's dive into indexed universal life insurance, or as most folks call it, IUL. So it seems like you're really trying to figure out, is this the right kind of policy for me? And we've got some pretty interesting material to look at, including some pieces that are really, singing the praises of IUL. So let's unpack it. What is it? How does it work? And does it actually live up to the hype?
You know what I find really fascinating about IUL is it really tries to tap into this desire that a lot of us have in personal finance to kind of get the most bang for our buck right.
Yeah.
People love products that can multitask, and IUL is kind of trying to do that.
Yeah.
By combining life insurance with an investment component.
Yeah, it's that whole like two birds, one stone kind of thing. But before we get too far ahead of ourselves, let's rewind a little bit. For someone who's totally new to this, how would you explain like the core concept of IUL?
So imagine this. You're paying your premiums right, just like with any other life insurance policy. But with IUL, a portion of those premiums isn't just going towards the death benefit. It's also feeding this separate account called a cash value account. And that account, it's not just sitting there doing nothing. It has the potential to grow. And that growth is linked to the performance of a specific market index, like the S&P 500, for example.
So my money is basically riding the stock market roller coaster. But hold on a second. Wouldn't that make it super risky? Like, what happens if the market just totally tanks?
That's a great question. And that brings us to one of the key features of IUL, which are these things called floors and caps. You can think of them kind of like safety nets. So the floor acts as a minimum interest rate for your cash value account. Mm-hmm. Even if the market takes a nosedive, your cash value won't fall below that floor, which is usually set at around 0%. On the flip side, the cap sets a maximum interest rate. So even if the market explodes, your gains are limited. Typically, those caps range somewhere between, 8% to 12%, depending on the policy. But the whole idea is to try and balance this potential for growth with some protection against market volatility.
Okay, so it's kind of like a buffer against the market's, crazy ups and downs. So we've got the premiums going into this cash value account. It's linked to the market, but we have these guardrails in place with the floors and the caps. What else makes IUL stand out? What are some of the other, key features that people should know about?
I think one of the most appealing aspects of IUL, especially for people who are, concerned about life's unpredictability, is that it offers flexibility. Life throws curveballs, and your financial situation might change over time. And IUL allows you to adjust your premiums, you can go up or down, to kind of accommodate those changes as they happen. So it gives you some degree of control, which can be really reassuring.
That is a nice feature. I mean, especially these days, Speaking of reassurance, one of the big selling points for IUL seems to be this potential for cash value growth. How does that actually work in practice?
Yeah. So as we touched on before, a portion of your premiums going into this cash value account that's linked to a market index. But here's the kicker. The growth in this account is tax-deferred. So that means you're not paying taxes on those gains until you actually withdraw the money, potentially allowing your money to grow faster compared to investments where you're getting taxed annually.
Yeah. Ah, yes, the magic of tax-deferred growth. It's like a secret weapon for wealth building, right? And so on top of that, I've also heard that you can actually access this cash value, like, during your lifetime. Is that true?
Absolutely. That's another big draw for a lot of people. Unlike traditional life insurance, where typically you only really benefit from the death benefit, when you pass away, IUL allows you to tap into that cash value for various needs that might come up while you're still alive. So you can imagine, needing funds for an emergency, or your child's education expenses down the line, or maybe even just supplementing your retirement income. It gives you that kind of flexibility.
So it's almost like having a safety net and a savings account all rolled into one. I can see why people would be drawn to that.
Exactly. But it is important to remember that accessing that cash value, whether through loans or withdrawals, it can impact your death benefit and the overall performance of the policy.
That's a good point. It's a good reminder that there are always, trade-offs to consider. Now, before we jump into the potential benefits and risks of IUL, I'm curious, how does this cash value growth actually compare to other types of life insurance? Like, what are the key distinctions there?
So I think it's helpful to compare IUL to kind of two main contenders. You've got whole life insurance, and then you've got term life insurance. So with whole life insurance, you get guaranteed cash value growth. But it's usually going to be slower compared to IUL's potential market-linked return. So it's like the tortoise, right? Slow and steady. And then on the other hand, you've got term life, which is much simpler, generally more affordable. But it only covers you for a specific period, like 10, 20, 30 years. So it's more like a sprinter. Great for short-term needs, but not for the long haul. And so with IUL, you're kind of trying to get that best of both worlds, right? You get lifelong coverage and the potential for that market-linked cash value growth. So IUL is trying to be like the agile marathoner, if you will.
So it's trying to hit that sweet spot, right? The security of whole life. But with the potential growth that maybe term life is lacking, it's a pretty compelling proposition for sure. But I imagine there's more to the story, right? Let's dive into who might benefit most from IUL and what are some of the specific advantages that are being highlighted.
Yeah, you're right. There's always more to unpack. The materials we have seem to target a few key demographics. You've got families, business owners, and high net worth individuals. And IUL kind of tries to offer something for each of those groups.
It's like they've got a tailored pitch ready for each type of client. Families seeking financial security, business owners looking for protection and growth, and then high net worth individuals who are seeking, sophisticated wealth building strategies. But beyond those broad categories, what are some of the specific benefits they're highlighting?
Well, they really hammer home this idea of the dual advantage, right?
Mm-hmm.
Protection and growth, which, as we've been discussing, is a major selling point for IUL. And it really taps into that desire for a comprehensive financial solution. They also emphasize the potential to access those funds during your lifetime. And they give concrete examples like, using the cash value for emergencies, education expenses, or supplementing your retirement income. They're really trying to make those benefits tangible, relatable to everyday life.
It's like painting this picture of IUL as like a financial superhero.
Yeah.
Capable of tackling any challenge that comes your way. But I gotta ask, are there any downsides? No financial product is perfect, right? What are some of the risks and limitations that they mentioned?
Oh, you're absolutely right. No financial product is without its drawbacks. And they do touch on some important caveats, even though they're very quick to highlight the benefits. So remember those market caps and floors we talked about. Well, those do provide a safety net, but they can also limit your potential gains. So it's a classic trade-off, right? Protection often comes at the expense of that kind of uncapped growth potential.
So it's not like a free lunch. Even with all these, attractive features, what about other potential downsides? What do people need to be aware of?
Well, one thing they do acknowledge is the complexity of IUL. There are a lot of moving parts. There's a lot of fine print to understand. It's not a simple set it and forget it type of investment. You really need to be comfortable with a certain level of complexity, and you need to be willing to, delve into the details a little bit.
It's a good reminder that, thorough research is always key. And speaking of things that might eat into your returns, what about fees? Do they mention anything about that?
Yes. Fees. That often overlooked but ever-present factor in any financial product. They do mention that policy charges can impact your overall returns, which is absolutely true. There are a variety of fees associated with IUL, administrative costs, mortality charges, surrender charges if you withdraw funds early.
It sounds like, understanding those fees and how they can impact your returns is really crucial.
Absolutely. That's where transparency is paramount. You really want to know exactly what you're paying for and be able to compare those charges across different policies. Don't be afraid to ask tough questions. Demand clear explanations.
That's great advice. We've covered a lot of ground already, from the basic mechanics of IUL to some of its, potential benefits and drawbacks. But let's say someone's listening to this and they're genuinely interested in exploring IUL further. What are the next steps? What advice would you give them?
Well, I think first and foremost, I always recommend a thorough self-assessment. You really need to take a hard look at your own goals and your financial situation. Are you primarily seeking long-term growth? Do you already have life insurance coverage? What is your risk tolerance? Answering those types of questions will help you determine whether IUL really aligns with your needs and priorities.
So it's about making sure IUL fits into your overall financial puzzle and not just chasing the latest shiny object.
Precisely. And once you have a clear understanding of your own needs, then you can start looking at specific policies. And that's where those policy illustrations become incredibly valuable.
I've heard those policy illustrations can be pretty dense. What should people be looking for when they're reviewing those?
Yeah, think of those illustrations as a kind of sneak peek into the future. With the caveat, of course, that past performance is never a guarantee of future results. But they show you potential outcomes based on different scenarios, which can help you evaluate whether a particular policy aligns with your expectations. So you want to pay close attention to things like projected cash value growth, potential death benefit payouts, and of course the impact of those fees we talked about on those projections.
Yeah, it sounds like having a guide to navigate those illustrations would be incredibly helpful.
You're absolutely right. IUL can be complex, and seeking guidance from a qualified financial advisor who specializes in this type of insurance can make a world of difference. They can help you understand the intricacies of different policies, explain the fine print, and really guide you towards a decision that aligns with your overall financial plan.
So a knowledgeable guide can really illuminate the path and help you avoid those potential pitfalls. But before we move on to discuss maximizing your IUL policy and all those tempting tax benefits, I'm curious about one thing. Throughout our deep dive, we've been analyzing IUL from various angles, but there's this one recurring element that almost feels like a marketing mantra. If you don't know what to do, better call Buckaloo. What are your thoughts on that?
It's certainly a catchy tagline, and it's clearly designed to position Larry J. Buckaloo as like the go-to expert for IUL. And it's a common marketing tactic, right? Create a sense of authority, create a sense of urgency, and encourage people to reach out for advice.
It's a clever strategy, but it also kind of raises a question about, potential biases. How can we reconcile this need for expert advice with the importance of being, discerning consumers? We'll explore that further in our next segment, so stay tuned.
Now, you might be thinking, okay, so let's say I've done my homework, and I'm convinced that IUL is the way to go. What's next? One of the things that makes IUL really unique is that it can be much more than just a life insurance policy. You can actually tap into your cash value while you're still living.
Wait, really? I thought the whole point of life insurance was just about, getting that death benefit payout. Tell me more about this cash value access.
Yeah, so there's more to it than meets the eye. With IUL, you actually have the potential to borrow against your accumulated cash value. You can think of it kind of like a built-in line of credit that you can access for a variety of needs.
Interesting. So it's almost like having a savings account that you can also borrow from. But what kind of scenarios would this be useful for?
Exactly. It's all about flexibility. Imagine you need a substantial sum of money for a down payment on a house. Or maybe you're launching a business venture and you need some capital. You can even use it to cover like unexpected medical expenses.
That's a lot of financial firepower. It almost sounds too good to be true. Are there any downsides to, borrowing against your cash value?
Well, you're right to be cautious. It's important to remember that. While borrowing from your policy can be convenient, it's not a free lunch. You'll typically have to pay interest on that loan. And if the loan isn't repaid, it can actually reduce the death benefit payout to your beneficiaries.
So it's important to weigh the pros and cons carefully. But beyond, those immediate needs, what about using IUL for longer-term goals like retirement? Is that something that people do?
Absolutely. IUL can be a really valuable tool for retirement planning. As we've talked about, the cash value grows tax-deferred, and you can actually strategically withdraw those funds during retirement to supplement your other income sources.
So it's kind of like having another stream of income that you can tap into during your golden years. And since those withdrawals from IUL are often treated favorably from a tax perspective, it could be a way to, minimize your tax burden in retirement.
You got it. It's all about maximizing those tax advantages. But of course, as with any financial strategy, it's essential to work with a qualified financial advisor to make sure it aligns with your overall retirement plan.
That makes sense. It's about, creating that cohesive strategy, not just picking and choosing random financial products. But let's say I'm not quite ready for retirement yet, and my kids are still young. Are there other ways to leverage IUL beyond those immediate needs and those longer-term goals?
Well, this is where it gets really interesting. Some people even consider using IUL as a strategy for funding their children's education expenses.
Hold on. Life insurance for college savings. I've never heard of that before. How does that work?
I know it might sound a little unconventional, but it is a strategy that some people explore. The idea is that you can potentially use that cash value that's accumulated in your IUL policy to help cover those hefty college tuition bills down the road.
So it's like having a dedicated education fund with the added benefit of that life insurance coverage.
Exactly. You're tapping into the versatility of IUL and using it as a multi-purpose financial tool. However, as with any financial decision, it's crucial to weigh those potential benefits against the costs and the complexities involved.
That's a great point. It all comes back to making those informed choices. Now, speaking of things that people should know before making a decision, let's circle back to those tax benefits. We've been mentioning, tax-deferred growth, tax-free loans, and a tax-exempt death benefit. Can you break those down for us in simple terms?
Sure. So tax-deferred growth basically means that you don't pay taxes on the gains in your cash value account until you actually withdraw the money. So it's kind of like letting your money grow in this sheltered environment where it can potentially compound faster than if it were being taxed annually.
So it's like giving your money a head start in the growth race.
Exactly. And then tax-free loans, as we discussed earlier, allow you to borrow against your policy's cash value without immediately triggering any tax consequences.
That's a pretty sweet deal. And finally, what about that tax-exempt death benefit? What does that mean for my beneficiaries?
So this is a major advantage of life insurance in general. It means that the death benefit that's paid out to your beneficiaries is typically tax-free, so they receive the full amount, without having to worry about a portion of it going to Uncle Sam.
Those are some compelling perks. It's no wonder people get excited about IUL, especially with all these potential tax advantages. But let's not forget that we're also examining a promotional piece here that's very enthusiastic about IUL. What are some of the common myths or misconceptions that they're trying to debunk?
Well, one of the biggest hurdles they're trying to overcome is that skepticism that IUL is just too good to be true. They emphasize that it's a legitimate, regulated financial product, not some shady scheme. They also address the concern that IUL is only for the wealthy by clarifying that policies can actually be tailored to fit different budgets.
It's like they're anticipating those knee-jerk reactions and trying to address them head on. But what about the risk factor? Is there any truth to that notion that IUL is just as risky as investing directly in the stock market?
Yeah, that's a valid concern. And they counter that by highlighting the protection offered by those floors and caps we talked about.
Yeah.
So even if the market takes a nosedive, your cash value won't fall below that predetermined minimum.
That does provide some peace of mind. But let's shift gears for a moment and talk about the process of choosing an IUL policy. There are so many options out there. How do you even begin to compare them?
Yeah, that's where it gets tricky. You really got to look beyond the marketing hype and delve into the nitty-gritty details. You want to pay close attention to the caps and the floors, the participation rates, which determine how much of the index's gains are actually credited to your cash value. And of course, all those fees that we talked about earlier.
It sounds like a lot to keep track of.
It definitely can be. And that's why working with an experienced financial advisor who specializes in IUL can be incredibly valuable. They can help you decipher all that fine print and guide you toward a policy that aligns with your needs and your goals.
So it's not just about understanding the product itself, but it's also about understanding, how to evaluate those different providers and policies. But let's not forget that recurring tagline we've been discussing. If you don't know what to do, better call Buckalo. Big. It seems like they're really pushing for people to seek advice, specifically from this Larry J. Buckalo. What are your thoughts on that?
It's definitely a bold marketing move. And it raises some interesting questions about how we as consumers should approach financial advice. Should we just rely on catchy slogans and celebrity endorsements? Or is there a more nuanced approach to finding trustworthy guidance? We'll delve into that discussion in our final segment. Stay with us.
Welcome back to our deep dive. We've really been digging into, all the different aspects of IUL. But there's one theme that keeps popping up, and I think it deserves a little more attention. This whole idea of getting expert advice, especially with something as complex as IUL.
Yeah, you're right. That tagline, if you don't know what to do, better call Buckalo. It's definitely been stuck in my head too. It really makes you think about how we should be approaching financial advice as consumers.
On the one hand, we know that IUL is not exactly a simple product, right? There are a lot of little details and things hidden in the fine print that even someone who's pretty good with their finances could miss. So having someone knowledgeable, someone who really understands the ins and outs, it could be super helpful.
Oh, for sure. It's like having a guide who can lead you through this complicated maze. A good advisor won't just explain all the technical stuff. They'll help you figure out a strategy that actually works for you, taking into account your goals, how much risk you're comfortable with, and your overall financial situation.
But on the other hand, we can't just assume that all financial advisors are created equal. Some might be more interested in selling you something than giving you truly unbiased advice. And that tagline we keep hearing, it's really pushing us towards this one guy, which makes you wonder about potential biases.
Exactly. That's where you have to be smart and do your homework. Don't just take the first recommendation you get or get swayed by some catchy phrase. Really take your time to check out potential advisors. Look at their credentials, how much experience they have, and whether they've actually put their clients' interests first in the past.
And don't be afraid to ask them some tough questions. Find out how they charge, how they approach financial planning, and what they think about IUL specifically. Make sure you're comfortable with their answers, and that their whole approach aligns with your values.
It's your money, your future. You have every right to be informed and choose someone you really trust.
So what does this all mean for you, our listener? If you're thinking, hey, IUL might actually be a good fit for me, go ahead and explore it. Do your research. Gather all the info you can. But also think about getting a knowledgeable guide, someone to help you navigate this whole process.
Just remember, the final decision is always yours. Weigh the pros and cons, think about your own situation, and choose what feels right for your financial journey.
Well said. And that wraps up our deep dive into indexed universal life insurance. We've covered a lot, but this is really just the start. Keep asking questions, keep learning, and keep making smart decisions about your finances. Until next time, happy investing.